we're not going back in time. We're not going to see 2019 prices. Like, it's just not going to happen. Hi, everybody. My name is Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our November market update. So a lot has changed since my last market update. When I was last talking to you, rates were down and we were starting to see purchase application come up, and that was very short-lived. So rates are basically back to where they started. So we are in the high sixes again. And that is because the 10-year Treasury bounced up to 4.25. So the 10-year has been hovering around there, and that has caused mortgage rates to increase. So I know that that seems really counterintuitive, because last time we were chatting, the Fed had cut rates by a full 0.5%, and you would think like, oh, the Fed's cutting rates, so now mortgage rates will go down, but the exact opposite happened. What everyone needs to know is that the 10-year is looking into the future on what they think that the Fed and the government is going to do. So when that rate cut took place and when the 10-year was at its lowest, around 3.6, the economy was looking dicey. We saw the unemployment rate go up. We saw there was questions about the job market. And so the 10-year was thinking that the Fed would be more aggressive and start doing big dramatic cuts. Well, now the economy seems like it's bulletproof and things leveled out. The unemployment rate went back down. Inflation stayed flat. And the job rate improved as well. So because the economy is staying so strong, and just today the GDP came out and we're still hovering around 3%. So the US economy is doing very well. So that is causing the 10-year to go up because they don't think the Fed is going to cut as aggressively as we did last time we spoke. So that has caused mortgage rates to go back up, which is unfortunate for anyone who is looking to buy a home. So mortgage rates right now, as I stated, are kind of hovering in the mid to high 6% range. I do not see an environment where they're going to get higher than that. So I think that we're kind of at its peak. But what buyers need to recognize and people need to recognize that if you're looking to time the market, which I think is a futile effort, that when you see some rates come down, like when you're ready, act. Don't try to wait for rates to go lower, right? Because the fundamental thinking was, and I thought it too, like, oh, we're out of this. Rates are going to start this steady downtrend down. And it lasted for like 3 weeks where rates were in the high fives, low sixes. And we started seeing a semblance of a functioning housing market. And then it was over as quick as it started. So I think people probably took advantage of refinancing in that short period of time, at least the smart ones who maybe had a 7 to 8% rate, but it wasn't long enough to really have any sort of impact on the resale market at all, because just as the public starts to catch wind that rates are coming down, it was over. So I think, again, it just harbors back to do something when you're ready. Don't try to time the market and try to time interest rates. But I do still believe that we are in a rate cutting cycle. I think the Fed's probably going to cut 2 more times this year, but it's going to be 25 basis point cuts rather than 50 because we are still in a very restrictive economy. We don't need to get to an accommodative economy. We just need to get to a balanced economy. And so they need to pull us out of this restrictive territory, but they're going to do it slow and controlled. And that's kind of why you see mortgage rates hovering where they're at. I do think in the future we're going to see them come down, but we are a far cry, and we are not going to see anything with a 4 in front of it for quite some time. And even then, for that to happen, the economy probably needs to derail a bit, and seeing Fed or Congress intervention into the mortgage-backed security market. So right now, Phoenix has about 16,000 homes on the market. We typically always see a slight increase in inventory this time of year, and that's more so due to the fact that homes take longer to sell. We start getting into the cooler months. We're approaching the holidays, so a lot of people are getting their homes on the market now, trying to sell before we get into the holidays. So we see that uptick in activity, and then it kind of peters out towards the end of the year. So we're in the beginning stages of that, starting to see that inventory now flatten out and stay kind of constant. I think we peaked around 16,700. Now we're down to 16,100. So that trend line should continue for the greater Phoenix area. Demand is super low. That's also part of the seasonality. So we always see a pullback in demand the closer we get to Thanksgiving, and then a real steep drop off Thanksgiving through the end of the year. So that seasonality is just now starting to kick in. Compound the higher interest rates on that, and that's put a lot of buyers back on the sidelines, waiting for that affordability to get better. And then we also have elections on top of it. A lot of people that just don't like uncertainty. Elections, and it proves in the data, have no impact on housing, the valuation. Of course, laws and those types of things may, but in terms of who's in the White House, does not matter to the value of your home and what happens with the housing market. But people don't like uncertainty, so they're on the sidelines waiting for the election to happen as well. So what buyers can expect is we are actually in a buyer's market. The last time we were in a buyer's market was December of 2022, and it lasted for about 4 weeks. Prior to that, we were not in a buyer's market. The last time we were in a buyer's market was 2014, and that lasted for 9 weeks. So believe it or not, buyer's markets do not come along very often in the greater Phoenix area. There is a big demand for housing typically, and not enough homes to satisfy that demand, usually firmly placing us into a seller's market. What can buyers expect? They can expect really good deals. We typically get good deals during the holidays in general, just based on our seasonality, but because demand is so low, they can get fantastic deals right now. So they can negotiate off price, they can get closing costs from the seller, they can continue to buy down their rate. All of the things that I've been saying that buyers can do over the course of my videos, they can do so on steroids. Like it is a good time to be a buyer. And what buyers need to remember is you cannot have it both ways. You cannot have ultra low mortgage rates and also beat up on sellers in terms of concessions. Personally, I'd rather be a buyer right now. There's over 16,000 choices on the market, so you have options. And I'd rather be a buyer today than during COVID when rates were at 3% and you only had 3,500 choices. Remember, those buyers, sure, they were getting rock bottom mortgage rates, but they were having to come out of pocket to buy their home, $10, $20, $50, sometimes $100,000 above what the home was listed for in order to get that property, as well as waiving inspections and all kinds of dumb things in order to get a home. None of that is happening right now. You have all the power. Yes, you've got a slightly higher mortgage rate in the mid sixes, but as long as you can afford that payment, it is an amazing time to buy. I'd much rather get $20,000 to $30,000 off the home than have to come in with $20,000 to $30,000 more and just get a 3% mortgage. So again, you can't have it both ways. This is definitely in favor of buyers. So if you are in the market, take advantage of it, get a good deal, and start working against those sellers. So what can sellers expect? Well, they can expect for buyers to be aggressive, for your home to sit on the market a lot longer. The pricing strategy should be pricing below what recently sold around you, not at or above. If you're trying to sell your home, you need to be aggressive. You need to do larger price reductions than you think you need to do. $5,000 price drop on a $500,000 home does not move the needle. You need to be doing $15,000, $25,000 price drops in order to get some action and movement on your home to get it sold if you're actually motivated. So the market is firmly in favor of buyers, and if you're a seller, you need to recognize that, get aggressive, have a good presentation of your home. I just went on a listing appointment where the seller's wanting to fire his agent, and the first thing I noticed is his photos were terrible. The guy walked through and took photos with an iPhone, and the property just looked awful. When he's competing against other listings, he's just not going to get the price he wants, and he's not going to get the traffic either. So the home has to be presented well, and it really needs to be priced accurately. The housing market's not that complicated. It just comes down to supply and demand. And if supply is increasing and demand is depressed, you're going to have to give concessions, you're going to have to sell for less. Now, that stinks, but remember, most sellers become buyers. And so if you're buying, you are entering into the same market. And so if you're selling your lower priced home to upgrade, that's a good thing because you are going to make money. If you take a 5 to 10% haircut on your $500,000 priced home to then get 5 to 10% more on a $700,000 or $1 million priced home, you're making money. So it is a great time to sell your lower priced home to upgrade into a higher priced home because you're going to come out ahead. Now, if you're a seller thinking of downsizing, I would not sell. I would probably wait until the spring, wait for things to improve, because again, you do not want to take a 5 to 10% haircut on $1 million home to only get 5 to 10% on a $500,000 home. So if you have the ability to stay put in your higher priced home and not downsize, I would. But if you're looking to sell to upgrade, this is a great time to do it, but you have to be aggressive when you price your lower priced home. So if you're not in the housing market yet, but you're thinking about it, the seasonality for Phoenix is fairly predictable. So our spring selling season starts kind of in that mid-January and really runs through June. So we see a lot more activity. It's going to be really interesting to see what happens with pretty much everything post-election. Do people feel better about doing something now that they know who's going to be in the White House for the next 4 years? So we'll be paying attention to that. Hopefully we see the Fed continue to ease policy and cut rates. I'd like to see mortgage rates come back down. I do think that the 10 years gotten ahead of itself and it is too high. So I think that will start to settle down a little bit. But we'll be paying attention to all of that, watching mortgage rates, coming out with our monthly updates to keep you guys looped in. But if you do have any questions, put them in the comments below. Don't forget to give a like and subscribe, and I will see you next month.